Hello everyone, welcome back to another video. In this video, I'm going to be teaching you a strategy which is better than the ICT silver bullet strategy. This is a strategy which no one really talks about. If I teach you this in this video, you'll be like, okay, I'm going to start using this strategy today instead of the silver bullet, instead of any other one like turtle soup, Judas swing, whatever you want to use. You're going to be using this strategy today because the win rate is so incredibly good that with this video only, you can in fact become a profitable trader. And just to show you some proof that this strategy does work, so today us and our team entered a strategy a little bit similar to this. So as you can see, I sent this signal out to the team and then it did actually end up running to TP all the way there. Okay, using this strategy a little bit similar, but of course with my entry model I kind of adjusted it, which is all right, okay, which is fine. Okay, so anyway, without further ado, let's get straight into this. And before I carry on, I do want to say, if you can't watch an ICT video for an hour long and you can't watch this one, which will teach you strategy, which ICT talks about also, which not much people will even enter. It's not popularized like the silver bullet strategy because no one knows it. And you can't watch this, that means there's no hope for you. You're never going to become a profitable trader. So make sure you do watch this video to the end, so you're an exception out of all of your trading peers and something like that. Okay, so anyway, the times which you're going to trade the strategy is, we're going to trade at 2:30 all the way to 4 o'clock, and this is UK time. So the timing for the strategy is actually 9:30 till 11 o'clock New York time. So you're only trading for 1.5 hours, and this 1.5 hours of trading can literally make you more profit than someone working a job in like a month, 2 months, 3 months. It's an incredible strategy. Okay, so we're gonna wait for, before 2:30 forms, we're gonna wait for market to do whatever it wants to do. If it wants to go up, down, you just let it do what it does. Okay, leave the markets alone. So it can literally just do like this, boom, and there you go. Also, I forgot to say, this works best on SPX 500. It works on Forex pairs, however SPX 500 does work the best, in fact. Okay, it can work on other commodities and indices too. So anyway, what we're going to do here is we're just going to mark our highs and lows. So high being right here, low being right here, low being right here, and low being right here. And you might say, well, whoa, I'm marking too many lows out. These are not all liquidity points. Just mark them all out. We're going to use them as our zone where buy stops get taken, sell stops get taken, or buy limits or sell limits, whichever one just gets taken. Okay, and this is something which is so easy but people don't understand. So when a low forms, it has to form like this. So the low, the candle before and after this low can't go below this low right here. And that's just a class of, that's just how I class the lows. Okay, I know so many people struggle for this, but that was just a quick example right there. Okay, so what we're going to do here is we're going to let price just do what it wants. Okay, so boom, price just starts running, and then and then we have to wait for one of these places to be taken. However, we don't wait for a market structure shift. Okay, what we wait for is we wait for something a little bit different. So we wait for one of these highs or lows to be taken. After the highs taken, what we wait for is we wait for the candle which took out the liquidity. Straight after it, we wait for a new low to form. And then if price goes above this recent high which is created, the one which took the liquidity, then the entry is invalid. Don't enter anything else. Okay, but if price breaks this low after creating the high, okay, no, the new low right here with the body, then enter in your trade. You might get a little bit of a late entry, however it's so incredibly good, and you're just going to literally cover the high right there. However, it's not this easy. If it was this easy, everyone would use it, everyone would be a profitable trader. So let me show you another example. So let's just say price is in the range. So our trading time's 2:30 UK time all the way to 4 o'clock UK time, or 9:30 New York time all the way to 11 o'clock New York time. Let's just say price creates a new low throughout this range right here. We can also mark out this low as liquidity, or let's just say it creates a new high right here. We can also mark out this new high as liquidity. Okay, also this high. So then same exact thing. Let's just say price takes out the low. As soon as price takes out the low, it has to form a new high. Okay, and then after forming the high, price has to break the high with the body, and then we enter in for our trade, and then we can just target the previous buy side. You can target some FVGs or whatever you want to really target. In the live trade examples, I'll actually show you. Okay, so that's that. Again, it's not this simple. Let me actually show you the live chart examples. I've got 3 examples for you guys. However, before I do carry on, I do want to say, if you want to learn some better strategies, it's in the link in the description below. As I did show you, this is not this exact strategy. I actually kind of tweaked it a little bit, and this is literally just for the mentorship group. There's 2 strategies. There's one strategy which is absolutely amazing, and there is one strategy which is basically this one. However, it is tweaked a little bit more. As you can see, here are all of my passing certificates, and you get so much out of this mentorship. Okay, you get live calls, and it's only $50 lifetime. Okay, lifetime. The reason why it's so low is because I want to do funded opportunities in the future. I want people to manage my funds, people who are in the mentorship, so they can take a cut and I take a cut, and my funds are all on autopilot, only for $50 lifetime. And again, it comes with all of this, and it is going to end soon. Okay, you learn 2 special strategies, one strategy which I'll never teach on YouTube, and this strategy right here which I won't teach on YouTube. However, I have showed you a little bit of it right here. There is still some more left towards the strategy. Okay, and if you want to pay me with crypto or PayPal, whatever you really like, you can email me right here, and we will sort something out, and I'll reply to you really quick. Okay, so make sure, if you want to join. It's going to be one of the greatest investments you made in yourself. Of course, you have to invest in yourself to get something out of it. The investment is basically so when you go to university, you pay for investment, you pay for going to uni. You're only paying $50 right here, which is significantly less. So yeah, anyway, let's just show you a chart example of how this works here. So 15-minute time frame, what we do is we mark out highs and lows. So first we wait for 2:30 UK time to form, which is right here, all the way to 4 o'clock UK time. And now we just mark out highs and lows created. There you go. So right here, there's a high. This isn't a low yet because the new candle hasn't formed. There's this low right there, and there's this high right there. So now we just wait for one of these to be taken. And straight away, this high got taken. Okay, so now what we wait for is, as soon as this high got taken, a new high can't go above this high. If a new high goes above that high, then we're not going to enter anything. Then the entry is invalid. Okay, there you go. The entry is invalid. Why? It's because this took out the liquidity. This sort of region right here took out the liquidity, not this one. So as soon as the low created, which was basically right here, as soon as price breaks out this high which took out the liquidity, then the entry is invalid. So just leave your entry. Don't force a trade, because forcing trade isn't good. It's not really good long term for your trading. Okay, but now we just literally wait for the same thing. We just wait for some sort of liquidity to be taken, and there you go, a new low formed right here. Let me just show you this more in depth on the 1 minute time frame. As you can see, a new low formed right here. So now we can wait for this one to take out, and again, 15-minute time frame. Okay, there you go. The low got taken out, and then what happened right here is we just wait for a high to be formed straight after the liquidity got taken out. Okay, so this region took out the liquidity. Now we just wait for a high to be formed. Okay, there you go. A new high formed right here, and now we wait for this high to be taken out of the body. Price can't go below this low. Why? It's because this region is what took out the liquidity right here, and yeah, so price can't go below that low right there. So now we just wait for this high to be breaking with the body. Okay, there you go. So now the entry is invalid. Why? It's because price just broke this low right here, the one which took out the liquidity, the region. So yeah, this entry is invalid, and now our next level of liquidity is right here. So now we just wait for the exact same thing to form. There you go. Price took out the liquidity right here, and now a new high formed. Boom. If price goes below this low, the entry is invalid. And there you go, the entry is in fact invalid right there. But what you could have said is that price didn't really take out the low right here. So this is just an example because I want to be real with you guys, right? You might have said, well, this is not liquidity. Why? It's because retail traders and investors wouldn't enter buy limits or stuff like that off this zone. Why? Why wouldn't it enter buy limits and sell limits off this zone? It's because this zone right here, price barely took it out. The stop loss is going to be way bigger than this. It's probably going to be this big, not this small, you know? So yeah. You can mark this one out as the candle being taken out liquidity. That's just something which you should really know. And then if price goes below this low, you could have said to yourself, okay, then I'm going to cancel my entry if price goes below that low. And then we had this high form straight after it. Price breaks it out with the body, then enter. And there you go. Price broke out with the body. Stop loss below recent lows right here, or below this low, whichever one you want. And then where you can target is you could target. I'm going to be realistic with you guys. I don't want to lie to you and be like, oh yeah, 1 to 50, 1 to 100. I like being a realistic trader. I don't like speaking any falseness. Okay, so yeah, right there you can target over there, and let's see what happens. Boom, targets get hit, and then straight reversal. Even at 1 to 1 it starts reversing. Okay, so let me show you another example of this strategy right here. So same exact thing almost. We're going to go to 2:30, which is right here. Boom, and same thing. So 2:30 hit right here, 2:30, and then 4 o'clock being right here, and we trade in this region. So now we just mark out highs and lows. So there was a low right here which got taken out at 2:30, which you can mark out. Low right here. There is these lows right here. Boom. And then there is this high right here. I mean this high right here, but yeah, you can't mark that out because that's not a proper high. Okay, so now we just wait for one of these liquidity zones to be taken. This liquidity zone, like I said before, what happened is that it basically created equal lows. So this one can be said, this candle could be said as taking out the liquidity. Never mind. price just took out a new zone of liquidity. Now we wait for a new high to form. And there you go, a new high formed right here. And if price breaks this low, then there's no entry. No entry right there. Now we can wait for another zone of liquidity to be taken, which is right here. Boom. There you go. Price took out the liquidity with these candles. Let's wait and see what happens. Maybe if there's a new zone of liquidity, we can mark that out. Let's go back. Yeah, right here. There's this zone of liquidity. Price took out the zone of liquidity. After it took out this zone of liquidity, what we can do is we can wait for a new high to form. Again, we just keep on doing the exact same things. It might seem a little bit complex, but when I show you the next example, then it's going to be really drilled into your head, and then you're going to be starting using the strategy every single day, making profits of it. Stop loss below this low right here, and then yeah, same exact thing. Only if price breaks with the body. There you go, price broke with the body, you got your entry right there, and same exact thing. You can literally target this FVG above right here, buy side liquidity, whichever one you want. It all depends on you really. Okay, and boom, as you can see, it did end up start flying. Okay, so there you go, that's that. Let me show you one final example so this can be fully drilled into your head, because I don't want to say no BS or no like, oh yeah, do this, do this, do this. It's a mechanical strategy. It's not no fugazi strategy, if you know what I mean. Okay, so anyway, same exact thing. 2 o'clock, 2:30, my bad. Mark out right here, and then we mark out 4 o'clock being right here. And then what we do is we go on the 15-minute time frame. So we mark out highs and lows. There was a low right here, high right here, and these are our liquidity zones. We can also mark out this low right here. And then straight after price open for our trading time, price took out the low right here, and it forms this high. As soon as price formed this high, okay, this new high right here, as soon as price formed this new high right here, we got a break with the body, and then we just enter as soon as price breaks with the body. Stop loss maybe below the most recent lows or below the low right here, and just targeting 1-to-1 RR. And the win rate is so incredibly high, so you can actually risk more into the trade. Same thing right here. Okay, so price formed this high, took out the liquidity, and then we have to wait for a new low to form, and boom, a new low formed right here. Now we wait for this low to be taken out of the body. You might say, well, yeah, price broke this high. However, I would like to see a break with the body. So there you go, price didn't break that, break the top right there with the body, broke this low with the body right here. Then we just enter our trades, boom. Stop loss above the high, same exact thing. 2 trades in 1 day, profitable, profitable. And yeah, that's just how the strategy works. If you didn't understand what I said, is you have to wait for this SPX 500, 2:30 till 4 o'clock UK time. You mark out highs and lows on the 50-minute time frame. You wait for one of them to be taken. On the 1-minute time frame, you wait for the liquidity to be taken, and then a new high to form after price takes the liquidity. If price breaks that low with the body, the one which took out the liquidity, then don't enter the trade. But if price breaks the new high which was created, then enter your trade. Okay, and that's really it. With the body, then enter your trade, stop loss below the low, and that's it. So that's the strategy, everyone. Again, if you want to join the mentorship, it's probably the best investment you can make in yourself. Very cheap, lifetime, $49.99. And yeah, everyone, that's it for the video. I'll see you guys in the next one. Take care.